Hey guys, Tim Hart here, and today I want to talk to you something about something different that just recently came out. The Barefoot Investor came out with a property report, and part of that, he had one of his advisors, Mike Kemp, have a bit of a checklist that he goes through, the 7 steps that he goes through, which I've got here, when he's assessing a real estate investment trust. So what I want to do is have a bit of a go through that list and also come up with a big one that I think he actually missed, that I think is actually more important than all the 7 that he actually came up with, and I'll get to that at the end of the video. But the very first thing he says to look at is the WALE, so the weighted average lease expiry. Very common. We want to make sure that the longer that we have until our tenants are potentially going to vacate, the more comfort we have. The big thing for us around WALE as well, we also see opportunity with properties with short WALEs. You might have a tenant that's been there in the property for 20 years, but their lease might be expiring in 6 months' time. There's certain things we can do that get some comfort that we know that they're going to extend. That's really all the WALE is about, is when is there a chance that we might have some vacancy. And the next one, that sort of leads into the next one, tenants. If you can get a solid tenant in your property, then you've got less chance of them vacating, because business is good. Why would they leave? So you've really got to make sure that you've got a really solid tenant in there. And the big one with us, we look at tenants with an S. We like at least 3 tenants, because we don't want all our eggs in one basket. So similar sort of thing he looks at, he wants strong ASX listed tenants are always going to be better than your mum and dad fish and chip shop sort of thing. The next one is to actually look at the property. Now he does sort of mention looking at the pictures of the property, and as great as it is to go and see the property in the flesh, it's not always possible. Now previously I would have said no, you have to physically see the property, and as fund managers, of course, we see the property before we purchase it. But as an investor, there is a lot of techniques now, in terms of like Google Earth and sort of the imaging and the pictures, as well as those supplied by the fund manager. You can get a very, very good idea of where that property is and what it looks like. The next one is yield, quite an obvious one. We want to make sure that we're buying something at an appropriate yield. We're not trying to buy something at a really, really low 2 or 3% yield, where there's just no value. So for us, we're still looking, ideally in that 7% plus sort of range, because we know with interest rates where they are, that we can get and generate quite a good return for our investors. The next one is debt levels. So you really want to have a look at, for a real estate investment trust, he suggests looking to make sure they've got low debt levels. Now he doesn't kind of go into any detail about what is low and what is high, but typically most real estate investment trusts that are listed, which is what he's talking about, is between sort of 20 to 40%. So 40% is actually seen to be quite high. Now at Active Property Group, we actually go a little bit higher. When we initially buy the property, we usually go for it as much as we can, like a 65% loan to value ratio, because we know as that value increases, that loan to value ratio will decrease over time as well. The other big thing for us as well is with interest rates where they are, we can definitely see a lot of advantage to borrowing as much as we can, because we're buying property with high yields, so the cash flow is extremely high. So it allows us to support that slightly higher debt level as well. So it really depends on what your particular preference is and your risk return ratio that you're looking for. Most of these listed real estate investment trusts typically are lower yielding because they are much bigger and they're designed to be much more conservative as well. So it depends really as an investor, what you're after as well. The next one's sneaky borrowings, where this is where the fund manager is actually boosting their income return by using borrowed funds to pay dividends. Now this is not something we do at Active Property Group. It's not something we look at. For us, the return is the return, because all you're really doing is you're boosting your income, but you're taking it from your capital. So the value of your unit is going to be decreasing. So not something to look at. And the last one that he goes through is having realistic expectations of returns. Okay, so just looking at where we are in the environment, with the COVID going on and that sort of thing, and sort of saying, you can't expect crazy returns. You need to be realistic, which I absolutely agree with in terms of what you're going to expect from that investment. But the big one that I really think that he missed, and I think trumps all of these, and something you need, doesn't matter how good the WALE is or the tenant, and that's the manager. You know, any real estate investment trust in Australia is ultimately a managed investment scheme. It's a managed investment scheme. So that means you've got someone managing your investment for you. You want to make sure that they know what they're doing. So have they got the relevant experience in that type of property and managing that type of property? The other big one that we look at is skin in the game. How much have they, fund manager, how much have they got invested in the fund? So our Active Property Group, we pride ourselves in that the directors behind Active Property Group are some of our biggest investors in our funds. So we're really putting our money where our mouth is. You know, we're not just some fund manager getting paid a salary to look after your investment. And I think that's the real key difference between, you know, some of these bigger real estate investment trusts and some of the more boutique fund managers that really out there. You really want someone that's going to be looking after your money as if it's their own, because it is. So guys, I hope you appreciate that, and if you are interested in commercial property real estate investment trust, please head over to activepropertygroup.com.au for more information. And as always, thanks for watching.